Google reports their earnings on Tuesday, July 26th, and on today's show, we'll give you a preview of what to expect when Google reports their earnings. What is going on, investors? Hopefully, guys are doing well out there. Going to talk about Google today on a number of different subjects. First of all, year to date, stocks down 25%. That includes a rather large drop after being up over $114 per share. And then Snapchat reported their earnings. This thing slid down to 107 on the heels of that. We'll discuss that and more. We will take a look. Whenever we come up on earnings, we're kind of taking a look back, see where the company has been. We'll also take a look forward. We'll look at some forward revenue estimates. We'll also look at some of the growth rates that Wall Street is anticipating Google meeting over the next couple of quarters. We've got to talk about evaluation. When you pull back 25% year to date, a stock like this gets a lot more juicy. We'll look at the price to sales, price to earnings over at this. Now, I think the key thing that we'll do on today's show is we're going to look at some of the different business segments that Google operates under. We'll take a look at YouTube. I also want to take a look at Google Cloud as well. We'll do a little bit of comparison in that sense as well. We will look at this from a technical perspective on Google. We'll see where there's some areas of demand depending on which way this stock breaks after earnings on July 26th. Certainly could be, I think, a pretty big move if this one gets momentum up or down. I think you've got $20, $30 worth of price action you could see in this stock in the shorter term, folks. That's 20 to 30% move over at Google. We'll discuss all of that on today's show. Now, again, we're on the backdrop of this stock being down, like many equities out there, many assets in general, down 25% year to date over the last year, down 16%. But when you start stretching things out with Google, over the last 5 years, you're up just 122%. And a lot of it has to do with the fact of the steady revenue stream. And I'll show you here in a second how this company has really kind of expanded their margins over the last couple of years. That's probably the biggest story with Google stock and the valuation that you get with Google. Now, we were sitting here with Google about 2 years ago looking at about $41 billion worth of total company revenue. Last quarter, they did $68 billion. A year ago, we were sitting on about $62 billion worth of revenue. The upcoming estimate is right around $70 billion. So a year over year, we're expected to go from about $62 billion up to $70 billion worth of revenue over at Google. Now, the thing to understand about Google, obviously all of us know about Gmail and obviously Google.com and certainly YouTube as well. The vast majority, about 3/4 of the revenue over at Google is spread between what I would probably call your bread and butter advertising businesses. Those are your ads that you see when you're on Google.com doing some kind of web query or search. The other part of revenue that relates very much directly to that is what Google labels as network. This is essentially a network of ads displayed across websites across the web. So the vast majority of websites that you are on, when they show advertisements, a large percentage of the time, it's actually a Google ad or Google's ad network kind of serving that ad. That's an $8 billion business on a quarterly basis. In terms of profit over at Google, this is what has been very impressive. And I'll show you from a percentage basis how they've expanded this over the last couple of years. Look, 2 years ago, we're sitting at about $8 billion worth of profit. A year ago, we were sitting at about $19 billion in profit. They've really expanded that really over the last 2 years. And when you come over here and look at from a kind of a margin perspective, you can see here, like 2 years ago, we were sub 20% on those margins. These are profit margins. Now, over the last 4 quarters over at Google, you are at 30% profit margin. And when we see news headlines with Google cutting back employees, I think with all these tech companies, the larger tech companies, the ones that are profitable like Google, I think when you see them put a pause on hiring, put a pause on the number of headcount that they have running the business, I think it's to preserve these margins and to preserve profitability. I think the growth rate is baked in a little bit. Now, in terms of those forward estimates on that revenue, again, we're expected the next couple of quarters over at Google to be pretty steady growth. Wall Street has their expectations stretched out about 2 years with Google, and they are consistently seeing that Google is likely to be kind of a mid-teens grower. So the upcoming quarter, we're expected about $70 billion worth of revenue. In the third and fourth quarter of this year, we're expected $73 and $83 billion worth of revenue. The forward revenue estimate, so this is the upcoming 4 quarters with Google, including the one that we'll see on Tuesday, July 26th, the forward revenue estimate is right about $302 billion. Again, this is company-wide over at Google. The trailing 12 months, so if we want to look back 4 quarters, so the previous 4 quarters over at Google, we had about $270 billion worth of revenue. So we're expected to go from $270 billion over a trailing 12-month basis to a $302 billion run rate. Now, from a valuation perspective, that equates to about a 5 times price to sales and about a 20 times PE over at Google. And so some of you might be wondering, well, how historically, what does a 5 times price to sales and a 20 times price to earnings over at Google, what does that mean from a historical perspective? And so the first thing I always look at is a price to sales. And people ask me all the time, like, what valuation metrics that you pull up the most? A lot of people go to price to earnings. I actually go price to sales first. And that is because companies can manipulate a sale, the way they recognize revenue. And certainly companies like Under Armour and others have been slapped and found guilty of some kind of revenue or sales manipulation, but it's a little bit harder than earnings, okay? You can do share buybacks, stock-based compensation, all these things can affect earnings. Sales, very hard. So when we're looking at Google from a price to sales historical perspective, I've got a 10-year price to sales chart over at Google here, and we're trading, again, just north of about 5 times sales, and you notice here, yes, we've dipped below 5 times sales. We dipped below during the pandemic, like a lot of stocks just kind of had a knee-jerk reaction to sell off. That was a great time to buy stocks, right? And you see back here, back in 2012, 2013, you had a drop on the price to sales with Google below 5, but every other time you've gotten around 5 times sales with Google, it has been a buying opportunity. When you look at the price to earnings over at Google, it paints a similar story. Again, we're doing a trailing 12 months price to earnings on this one, and you're trading about 19.5 times earnings. That is almost a 10-year low. You have some period of time back here in 2011, 2013 when Google traded south of 20 times earnings. And again, I want to remind you that the forward revenue estimates and the forward earnings estimates over at Google are expected to grow, with earnings looking like maybe a little bit of stall out on earnings for the upcoming quarters, but expected to reaccelerate sometime into next year. And then with earnings, you're expected to kind of be a mid-teens grower over at Google. So when you look at these price to earnings, this is a trailing 12-month basis. You start to look out forward, and if you believe the estimates, you believe the growth, where you're paying way less than 19 times, probably more closer to 18, 17 times forward for Google when you factor in the estimates. Now, some of the things that I think investors certainly think about with Google, but maybe it's hard to visualize, is I wanted to bring up YouTube here. And so this is obviously a big property over at Google, probably one of the greatest acquisitions in the history of any business out there is when Google acquired YouTube. And what I wanted to show you was something really interesting. So over the last trailing 12 months over at Google, which is basically the previous 4 quarters over at Google, we've done $7 billion, then $7.2 billion worth of revenue, then $8.6 billion worth of revenue, and then about $7 billion in the most recent quarter. So if you take the trailing 12 months revenue over at Google, you're sitting right at $29.7 billion worth of revenue. And I thought to myself, that sounds like a lot of revenue. And it certainly is. When you look at NVIDIA, their trailing 12 months revenue is actually lower than YouTube, coming in at $29.5 billion. The Wall Street experts out there and the stock market values NVIDIA at $445 billion. Now, I'm not getting on here and saying that YouTube is worth as much as NVIDIA, but you can start to see how a property like YouTube, if it was spun out or created as its own separate stock, certainly not in today's market where we've seen depressed valuation, but imagine a year ago, and then maybe fast forward 2, 3, 4 years down the line when another bull market comes and animal spirits hit everybody. Well, a property like YouTube probably will have exceptional revenue growth over that period of time and probably a heightened valuation over where you stand today. Now, you also have Starbucks doing $29.4 billion worth of revenue. That company is worth $95 billion. I will absolutely affirmatively say right now that YouTube is definitely worth more than Starbucks. You have Salesforce.com, which is CRM. That company did $27.9 billion worth of revenue. Wall Street has that company valued at over $172 billion. Finally, you have PayPal, which had about $25 billion worth of revenue. Wall Street has that company valued at $92 billion. I think it's safe to say that YouTube's probably certainly more valuable than Starbucks and PayPal. I think you could argue that it's definitely more valuable than Salesforce. Probably not more valuable than Nvidia, but you've got at least a $200, $250, $300 billion valuation when you look at just YouTube alone. And some people are probably wondering out there, what's the growth driver? Is there more growth to be had over at YouTube? And I would say probably from an ad perspective, again, we're looking at just a revenue perspective. From a user growth perspective over at YouTube, yeah, probably its growth days are over, but it has such a large audience and a large swath of content on the site that is vastly free. They've got plenty of ways to grow revenue. And some of the ways that they are going to do that is the fact that you have this transition going on. Certainly when you look at companies like Facebook, you're transitioning from text-based ads, image-based ads, like on your news feed on Facebook and your Instagram feed. Now you're switching to video ads in your Reels, on your TikTok. That will benefit Google because over the past 10 years, there hasn't been a lot of creation of video ads unless you really needed it. Now more and more online advertisers are creating video ads, and Google is making that easier because probably one of the primary reasons why search is such a huge $40 billion in a quarter in terms of its revenue. And then you look at network being an $8.2 billion business on a quarterly basis and wildly profitable as well. It's very easy to create text-based ads. You just type it out, a headline, maybe you grab a thumbnail and throw that in there. That is why Facebook was able to scale up so big, and that is why Google was able to scale up big as well, is those ads were so easy to make. You literally could make 10 or 20 of them in a day. It didn't take a lot of experience. When it comes to video ads, creating ads here on YouTube that show maybe before or between a video, well, it takes a little bit more skill, and what we're seeing is Google start to create the tools for that. Now, I'll bring you over into my own AdWords account. I buy a lot of online ads, including through Google, and I actually think this is a pretty cool thing that Google is offering. It's basically these templates, and I'll kind of hover over them so you can kind of see these things as I'm talking. But what it's going to allow you to do is upload some creatives, like some still photos, maybe some text, maybe an offer that you might have. And what it's going to allow you to do is just upload that information, and Google is going to kind of automatically create these kind of slideshow presentation types ads. This will certainly lower the bar for people coming on to the platforms like YouTube, needing to create new ads as the attention online shifts from reading things like blogs like we used to back in the beginning of the internet to kind of just scrolling through feeds and briefly looking at memes and pictures. Now we're looking far more at video and consuming that. So you're going to see a lot more shift to that. I think that will be a tailwind to Google. The fact that you'll have all these advertisers shifting from text, thumbnail, meme type ads to these video ads, I think that will be bullish for Google into the future. Certainly should be a tailwind for YouTube. Now, the other piece of business that I want to talk about over at Google is Google Cloud. I've essentially pulled up a 2-year revenue trend over at Google 2 years ago on just the Google Cloud business. You were at $2.8 billion worth of revenue. You lost a lot of money on that. You lost over this is, I should have cleaned this up a little bit. It's 1,730. That's in millions. So this is $1.73 billion they lost of just $2.8 billion worth of revenue. You've seen over at Google Cloud, it's starting to trend in the right direction. In the last quarter that we had $5.8 billion worth of revenue over at Google, and you lost about $931 million on this. Now, the first thing that I want to say is this profit or this operating profit that they show on their financials, will certainly look at this when Google announces their earnings on July 26th. What we want to see, first of all, is there any improvement in this? You see over the last 4 or 5 quarters, they've kind of been in that operating loss between 8 and 900 million, and they had revenue between 4 and 5 billion. We'll see if they're able to push that over 6 billion, and we'll see if that is going to increase their profitability to a certain degree over at Google. Now, the other thing that I will say is this profit, the fact that they have to recognize this as a loss, is slightly misleading. Okay, the way these cloud services work primarily over at Google, and we'll talk about Amazon AWS here in a second, is companies like Google, okay, okay, they operate YouTube, obviously. They need a ton of server space and a ton of computer capacity just to be able to operate YouTube. And then obviously you have Google.com, which is one of the most hit on websites in the world. You have Google Maps. You have all these very server and computer intensive activities that Google operates under. So what ends up happening is they actually have excess capacity. And so that's essentially what Google Cloud is they have all these servers running YouTube and Google Maps and Google.com and Google Gmail. And obviously they'll have excess capacity. So they're basically selling off their excess capacity. So yes, they generate $5.8 billion. And from a paper loss, they generate a loss on that. But if they were not selling that excess capacity, they would be losing out on the fact that they could be generating revenue off of it. So it's kind of like a person that lives in maybe a large 4-bedroom house and they are living them by themselves and they rent out an extra bedroom or rent out the guest house in their backyard. That would just be sitting there unused anyways. So you might as well generate a little bit of money from that. But we will want to see as investors over at Google, and I don't think this is priced into the valuation. When you look at the 5 times sales, 20 times price to earnings over at Google, I don't think anybody's really priced this into the stock. Well, what if Google Clouds becomes wildly profitable? And the example that we look to is AWS. So obviously Amazon's AWS over the past trailing 12 months, that business unit over at Amazon did $67 billion worth of revenue. And the trailing 12-month profit is unbelievable over at Amazon. And we'll probably do an Amazon preview video. They report their earnings next week on July 28th. One of the reasons why a lot of people think that stock is undervalued is look at the profit you generated. This is just off AWS, off of $67 billion worth of revenue. You generated $21 billion worth of profit. Those are incredible margins. And so I think some people are thinking, well, what if that happens to Google? Okay, will they get to $67 billion or they'll overtake AWS? I don't think so, but they could get to a fraction of this and a fraction of this profit, and it certainly would be beneficial for Google. Over the past trailing 12 months, if you want to know, compared to AWS, we did $21 billion worth of cloud revenue over at Google. Again, that compares to the $67 billion you saw over at AWS. Now, back to the ad side, we saw late last week, Snapchat reported their earnings and it had a negative impact on Facebook and had a negative impact on Google. Now, I'm not saying that Snap's announcement has no basis or no relation to Google or any of the other online advertisers. It certainly does from a growth perspective. We've really seen Snapchat's growth over the past year really come to a screeching halt from just $982 million, just up fractionally to $1.1 billion. But there's the first separation between Snapchat and a Google. Snapchat does $1 billion in 3 months. Google does $68 billion in a quarter. So they basically do a Snapchat every other day over at Google. In fact, a little bit more than that. So this is just, it's almost comparing apples to oranges. And certainly when you flow through Snapchat's earnings off of $1.1 billion worth of revenue, they had $1.5 billion worth of cost, and they lost $400 million off of $68 billion worth of revenue in a quarter over at Google. They had $20 billion in profits. And again, we talked about how you had 30% margins over at Google. At Snapchat, they are negative. So when your growth rate slows and you already have negative margins, yeah, the stock is going to get absolutely obliterated. Certainly if Google gets on their conference call in 2 days and 3 days and says, look, guys, our revenues have stalled out and our margins have gone to single digits, yeah, this stock would probably fall back a tremendous amount, but nobody is really anticipating that at the current time. We'll certainly see on Tuesday. Now, in terms of a technical perspective over at Google, very shorter term, we are in an uptrend. I'll show you more of that in a second, but I do want to take a broader view over at Google. It was on a monster uptrend, got us up over $150 on a split adjusted basis over at Google. That was, I think, $3,000 on a non-split adjusted basis. We've pulled back to about 110. The stock is starting to comfortably trade in that $100 to $120 range. If we put up some kind of stinker, like I said, 30%. Margins shrivel up over at Google. That will certainly have a negative impact on the stock. Them projecting out into the future that comes well underneath the forward guidance that we have. Again, we're expecting $70 billion worth of revenue on July 26th, and we're expecting some kind of guidance or reassurance that Q3 will be about $73 billion, and we're looking for $83 billion in Q4. We're looking for some kind of assurance over at Google on that sense, and then we're looking for these margins to maintain kind of high 20s, hopefully 30%. If that happens over at Google, probably some good things are going to happen. But let's say some bad things happens. Well, I think some red candles could show up on this one. And I think the thing to show you is I've got a volume profile. This is essentially showing you demand for the stock at different price levels. The longer these candles stretch out, especially the green bars, the more you had from a buying perspective. You see right where Google is, there's actually a lot of demand for the stock. So if this one just slips lower in the after hours, you do have some demand down here at about $100 per share. I think that would be a decent buying opportunity. If for some reason you are able to slice right through that, hello, there's not a lot of demand until you get down to about $80 per share over at Google. That's on the bear case scenario. I think the ultimate bear case is to get down into the 80s. And again, I wouldn't necessarily expect that next week unless you have this just total obliteration. Certainly we've seen that, okay? We've seen that with Facebook, we've seen that with Netflix, and we've seen that across the board with a lot of other stocks. But in terms of the mega cap stocks or the larger cap stocks, we've certainly seen that happen. So it is a probability and it is possible, but I think the odds of that are relatively low. I think our downside on this one is a retest back down here to the lows that we've made in this most recent downtrend, right at about $100 per share. All things being considered, if margins are high 20s, 30s, and our growth rate is expected to be mid-teens, I'd probably step in and buy Google at this point. Now, what we've seen more recently is Netflix and Tesla reported their earnings last week, and both of them basically made the same type of move. They busted out of similar type sideways consolidation patterns they had similar to Google, and they actually busted out underneath this. Now, what's interesting with Google is yes, we have some demand and there's some clear areas that should materialize as resistance up here at about $120 per share, folks. That's a 20% move virtually on this stock, and I think it could comfortably get there, but you have even higher resistance levels up here at 130. So your ultimate upside, I think quite frankly, is back up here into the 130s. That would require a really bullish call from Google, I think on their cloud division, probably YouTube and guidance as well. I don't necessarily anticipate that, but if you get marginally good news over at Google, confirmation of the next couple of quarters being good, I think you could pop up into this range over Google. Wouldn't necessarily buy shares up at this range. Certainly if you're a shorter term investor or shorter term trader, I think this is where you take profits up in this area. From a buying perspective, we're looking to buy this one at 100. If it breaks through that level, boy, I think you're backing up the truck at these levels south of 90 if that materializes, which I think when we look at the data that we're seeing come in, probably a slightly low probability. Folks, that was Google. They report the same day as Microsoft on July 26th. Be sure to subscribe to the channel because we'll have earnings videos all next week on all of these companies. We'll go in depth on the earnings. We'll discuss some of the things that we discussed on today's preview show, see how the YouTube revenue is progressing. We'll see how Google Cloud's revenues and potential profits are progressing over at Google, and we'll certainly take a look at the forward estimates and see if these are intact. And I think probably even more importantly than that, what are the operating margins over at Google? Can they maintain these 30% margins? Because if they can do that and maintain a 15, even maybe as high as 20, 25% growth rate, folks, 5 times sales, 20 times earnings for 30% operating margins and a 20% top line growth, that's a cheap stock, and we certainly will be here to cover it for you on the Investor Channel. Hopefully you guys enjoyed today's video. We'll be back in soon with more. Good luck with your investments.